But looking at the markets today, we're getting a nice rally, which shouldn't be surprising. Shouldn't be surprising, this rally. I mean, the bull bear indicator from Bank of America, and a couple of companies track this, but this measures like a dozen technical indicators, the breadth of the market, option activity, and VIX and all that, right? And it throws it into like this indicator, and it goes from 0 to 100. And it's a contrarian indicator. So extreme bearish is 0, meaning that you should be buying stocks if it's 0. Very, very, hand over fist. And if it's 100, that's a bullish reading, meaning you should be selling stocks. Right? 'Cause again, contrarian indicator. The reading between this, you'll usually see between 20 and 80. It's 0. It's at 0 today. Or actually before today's open. So during the weekend, it was at 0. 0. It doesn't get more bullish than that from a technical standpoint. That means the whole world is leaning towards one side. All these shorts, you just need a little bit to happen, and boom, you're getting a nice market rally. That may change. I'm doing this at 10:30 right now today. It may change. Maybe we fall. Again, every rally has been met with selling. It's not a buy to dip market anymore. It's more like sell or rips because of all the confusion and no certainty around inflation. We're likely to see that again. And that confusion, that's what it is, the uncertainty. I mean, people are worried that inflation's never going to come down. They're still going to have supply chain concerns, labor issues. We still have that. Russia, Ukraine, when's that war going to end? Which is leading to higher energy and food prices and supply chain concerns in those two industries. So that leaves the question, do I just get out of the market, stay in cash? Is this crazy? Hold on a minute. Just keep listening, just for a little bit longer. So people ask me, Fred, what are you doing right now? I'll get out of the market. What are you doing right now? What are you doing right now? And for me, it's I'm going golfing more than ever, going to happy hour, getting drunk. I'm just kidding. I'm not doing that. I'm actually working harder than I've ever worked in my career. And the reason is because, for me, I'm a guy that focuses on mistakes. That's how you get better. And my biggest mistakes was not getting more aggressive during times like this. I'm not saying I'm throwing every single penny I have in the market, but I'm picking away and I'm buying here. And these major pullbacks that you're seeing, and forget about the 20% in the S&P 500, and it usually goes down 27%. Again, you look under the hood, there's names down 70, 80% that are decent names that you'll find. But I want to be more aggressive when times are shitty because they don't happen often. I mean, think about it. Think of the long-term buying opportunity. Think of the 87 market crash. By the way, the 87 market crash, largest on record at that time, massive one-day crash. The Dow finished the year higher that year. That's interesting. Think about the dot-com crash in 2000. Great opportunity to buy tech stocks. Yes, 2001, 2002, 2 years you're sitting there and shit, it sucks. Think about 4 or 5 years from now. That's how you should be thinking as an investor. I know it's hard because everything's today, tomorrow. Oh my God, everything's like right now, right? With social media, send the email, some person in China opens it up in a half a second. Less than that. I know everything's immediate and everything is designed to scare the shit out of you, like they did with tariffs, like they did with so many different issues over the past 10, 12 years that probably kept you out of the markets when you shouldn't have been out of the markets, with the Fed keeping rates at 0 for almost a whole period outside of, 2016, 17. And buying bonds and flooding the market with cash. You should have been in the market. Everything was going higher. But again, everything's going to amplify. You watch it, the headlines, you see everything in social media. It's right in front of you. Until you have young kids talking about racism, critical race theory, and politics. I didn't know anything about politics until I was like 25, 27. I mean, my daughter, they had CNN on in a fucking classroom when she was 13. So I pulled her out of the school. I don't care if it's CNN or Fox. Why do you have that shit on in front of kids? Are you kidding me? With all the bullshit? I mean, it's a different world. Everything's in front of you today. You see everything. So it scares the shit out of you. And that's okay. But think about your 401k and long-term holdings. And yes, you're looking at it being like, wow, I'm down right now. It's getting killed. Yes. But, if you've been in the market for the last 10 years, you're up considerably still. But these times like this, when the market COVID, 2008 credit crisis, what happens? Look at those buying opportunities. I'm not saying to go on margin, buy everything in sight, but here's what I'm looking at. I'm looking at China. You don't hear me say that often, do you? I know people tell me buy China for decades and decades and decades, but right now China's kicking our ass. They're producing so much cheap energy, so much coal, they're stockpiling everything. Yes, we see places that are closed in Beijing now with COVID, but it is opening. You're starting to see reopens. And it's an economy that is much, much better shaped than we are. That's where the growth's supposed to take place. The world growth. And stocks have never been cheaper. But they're light years ahead of us. They don't deal with this ESG bullshit where, I don't care. It doesn't matter what the macro conditions are. No more fossil fuels, right? That's what our administration ran on. That's fine. You could say they're opening up federal lands, which is bullshit, right? You saw the Exxon CEO on TV just ripping apart the administration about how much money that they spend. And again, they're going to tax them and do anything. Whatever. We have a pro-alternative energy, which, again, alternative energy, climate change, serious things. But, at times like this, where energy prices are, let's produce as much as we can and throw some of those profits into alternative energy. Because right now, China's laughing at us. Venezuela's laughing at us. The Middle East is laughing at us. Everybody's laughing at us because we're a complete joke. And we're losing power when we have the greatest and most powerful commodity in the world. And it wasn't like that ever until 2009, 10, 11, fracking, hydraulic technology, and drilling, horizontal drilling. That's, again, studying that tremendously and going to all these fields throughout America. I mean, I've learned so much about it, but come on, let's produce this at lower energy costs, because right now, someone else is producing coal, and that coal is going to damage the environment just as much if we produce it here or if China produces or we produce someplace else. Yet it makes their economy much, much stronger. But when I'm looking at China, man, they're set up great right now. Looking at the price of these stocks and how much they got nailed, China is I'm looking at China for the first time in a very, very long time. Maybe ETF, the large caps, don't go into crazy stocks. I've been to China. I got screwed once before with small caps. I saw an amazing company, which happened to be in the coal industry, and saw their assets personally. Unfortunately, they sold those assets like 3 years ago and never told anybody, which is great. It's China, the most corrupt nation in the world, just about, next to Ukraine. But it's insane when you look at that. But look at large caps, guys that are reporting. China is a great place right now to invest in. I'm looking at stocks that went public via IPO, SPAC, over the past 18 months. So think about it. When a company goes public, what do? They raise a shitload of money. And in the past 18 months, because we had some of the bullish market conditions in the history of our country, they came out at stupid, ridiculous valuations. And they sold us to the public, and the public got destroyed. Crazy, crazy, insane valuations they should have never came out at. But that's fine. Good for them. They raised a lot of money. They were able to sell some of their stock. Now these things are down 70, 80%. They still have that growth, except you're not paying 50 times sales, 75 times sales. Now it's more like 10 times sales, 8 times sales. And what do they have? They have extremely strong balance sheets with tons of cash on the balance sheets. So they still have that growth. Maybe it's a little bit slower. Instead of growing like 60% because they're smaller companies, or 50% or 40%, they're growing 25%. They're going to grow earnings. And now you're seeing these valuations come down tremendously. They're sitting on massive cash balances that account for more than 50% of their total market cap. No debt on a balance sheet. These are names that I'm looking at, because some of those names are great. They're great companies that came out. Some of them, they just came out at stupid valuations that it was a joke. And a company with $1 billion valuation should come out at $15, $20 billion valuation. It's insane with the Coinbases and the Robinhoods. Great ideas that change the landscape of industries. But should they come out those crazy valuations? No, absolutely not. So that's where I'm looking. Again, you have to look today. Stop looking at the past. All this shit, these companies are terrible, CEOs terrible, all this shit is garbage, all of that. You have to look at today. Try to forget about everything that happened and look today, like a fresh look. And that's hard to do if you own these stocks in the past and got killed. It's really difficult to do. But you want to take a fresh look at these names. But man, how many are down? 75% plus from their highs, still growing. Again, 50% plus of their market caps are in cash. Might pick away at a couple of those. I'm also looking at companies trading below 10 times forward earnings right now, which is a lot. that are also growing earnings more than 12% I have on there, then I'm doing an even deeper dive. So it's not just I want to buy cheap companies because cheap companies get cheaper. I want to see the growth, but plus I want to see some of these companies are raising the dividends. Let's get a dividend more than 2%. That's nice. And then you're seeing insider buying. I mean, there's more insider buying taking place right now. It's almost near record highs, like back in the credit crisis. Again, these insiders are buying. It doesn't mean that stock's going to go higher. We've seen over the past couple of weeks they've been buying and stocks have sold off. But the fact that they're buying their companies, that's a great sign. And these guys aren't buying okay, I'm looking to buy and load. These guys already own their stock, and I've been talking about notable purchases. I'm not talking about 10% owners of hedge funds, of other people's money. I'm talking about CEOs, CFOs, people associated with a company that are making $1 million plus purchases. Those are huge, huge purchases. They could do, very, very wealthy people, they can do whatever they want with their money. They're buying their own stock at these levels. That's what you want to see. That's awesome. And again, they're not looking at it as, well, maybe the market and inflation continues to go higher and, we see another 15% downside. They're saying in 2 or 3 years from now, this is going to be worth a lot more than where I'm buying it right now. So much so that I'd rather do this with my money than anything else and buy a house, buy other assets, buy other stocks. And these guys know exactly what's going on internally with their company and they're buying. That's a great, great sign.